OEM coming out with its numbers, and the key to watch out will be the margins of the company and the outlook by the management going ahead, because this time in Q1FY23 we are aware of the challenges. There was a chip shortage situation. Talking for a company like Bajaj Auto, there were challenges from the volumes front as well. The two-wheeler demand was somewhat muted, and even the export markets did not favor that much, and all in all the product mix was also not that supportive. If we see the total volumes of the company, then they were down around 7.2% on a YY basis, and sequentially there was a decline of over 4%. All of these factors are going to weigh on the numbers, so let's come on that. Firstly, from the top line, the revenues are expected to be up around 3.4% on a YY basis at 7,652 crores. Talking of the EBITDA number, 1,193 crores is our expectation, and that will be a jump of 6.5%. We have seen that the companies have been increasing their prices of their vehicles, and because of that, the realizations are expected to show a jump of around 12.3%. Coming to the margin number of the company, this time around the raw material inflation was quite very much. The expectation is at 15.6%, but on a sequential basis, if we see, then that will be a decline of around 150 basis point on a quarter-on-quarter basis. Apart from that, there was a deferral of material cost increase back in Q4 FY22. So how is that going to be panning out in the margin numbers of the company? We'll be watching out for that. But overall, the company is expected to have the benefit of the rupee depreciation, and in the bottom line, if we talk about, then the profits are expected to show a flat growth on a YY basis at 1,069 crores is our expectation. So a decent set of numbers expected from Bajaj Auto. Going forward, the management commentary on the demand outlook and especially how the overseas business is expected to perform will be the key to watch. बस एक हिंदी कर रही हूँ ना, इसके बाद एक और कर लूँ क्या? बहुत लंबा था आई गेस. Bajaj Auto, the first large OEM coming out with its numbers, and this time around the key will be to watch out. Bajaj Auto, the first large OEM coming out with its numbers in Q1FY23, and this time around the key will be to watch out for the margins of the company, and as well as going forward what is the outlook on demand shared by the management, because this time around in the quarter gone by we are aware of the challenges. There was a chip shortage situation, the commodity inflation was quite high, and all along the demand on the domestic two-wheeler segment was quite muted, and this time the export markets also did not support Bajaj Auto that much. And overall, if we see, then the product mix was also not that in favor, because the three-wheelers volumes were lower, which is somewhat a high margin product for the company. In Q1 FY23, if we see, then the volumes were down 7.2% on a YY basis and over 4% of decline on a sequential basis. All of these factors are going to weigh heavy on the numbers of the company. The company has been taking price hikes. On the back of that, the realizations are expected to go up 12% on a YY basis. Now let's talk numbers. The revenues are expected to be up around 3.6% on a YY basis at 7,652 crores is our expectation. EBITDA number expected at 1,193 crores, and coming to the margins, there we are expecting a sequential decline from 17.1% last quarter to 15.6% this time around. So high commodity inflation and operating deleverage are the two factors that are going to weigh heavy. The volumes were also not that supportive. But the rupee depreciation is somewhat going to help the numbers of the company, and in the bottom line, we are expecting a profit number of 1,069 crores. That's about the numbers, but we'll be watching out from the management commentary. What's their outlook on demand, and especially how do they see the overseas business panning out?